Okay.
New car, 55,000 per month, unlimited food, six-figure job, pay no taxes, or $250,000 right now. You can only pick two.
I can only pick two.
Yeah,
I'm gonna take unlimited food and pay no taxes.
man.
One step forward, two steps back. So you're gonna pass up $660,000 per year. Didn't say you had to work for it, but you're getting $55,000 a month, and you have the option to pay no taxes. And this fool chooses food. Stay in school, please. If you got a child, push them in math.
I just wanted to show that because I thought that it was absolutely hilarious. And one, but I just thought it for two, it shows the lack of financial literacy that we have in the black community. Let me go over the options again for y'all, okay? Let me go over the options again. The options were, okay, to only pick two from a list of six. The first option was a new car. The second option was $55,000 every single month. The third option was unlimited food. The fourth option was a six-figure job. The fifth option was pay no taxes. And the sixth option was $250,000 right now. Now, I saw some people say that they would choose the unlimited food plus the $55,000 per month because they could take that food and turn it into a business, right? Where they maybe have multiple restaurants or something along those lines, but it doesn't matter because you would still have to pay taxes on those restaurants and on those businesses. The only correct option from this list of six, the only correct option is the $55,000 every single month. And the second option is to pay no taxes on that money. Could you imagine what it would be like to receive $55,000 every single month and have to pay zero taxes on it? And this fool chose unlimited food. Financial literacy is important, which is why I do these videos. Let's move on to today's topic. I just thought that was very interesting to show y'all the state of what's happening out here and where we are as a community. But let's move on to today's topic. Today we are talking about a BDC which has just gone from paying quarterly to monthly. Once again, this is a BDC that has gone from paying quarterly to paying out dividends monthly. And we are talking about Capital Southwest, ticker symbol CSWC. Now, for those that don't know, I've gone over this multiple times in my previous videos, but I'll go over it for the sake of this one. Once again, just in case this is your first time watching. A BDC is a business development company, okay? And what business development companies do, they're usually middle of the road companies that provide funding for businesses that they're not exactly on the low end, meaning they're not startups, right? They didn't just start their business a year ago and they're not struggling as far as getting it off the ground, but they are also not a multi-billion-dollar or trillion-dollar corporation that is well seasoned, right? They're not going to be a startup BDC or a BDC that needs funding from a company like Capital Southwest isn't going to be your typical companies that are already well seasoned and got skin in the game, right? So you're not going to see a Texas Instrument or Google or Apple. None of those companies will be a part of this, right? So these are companies. It doesn't mean that these aren't companies that haven't been around for quite some time, because to the contrary, they have, and especially a lot of the ones that they deal with, they've been around for, maybe 6 to 7, some to even 10 years. Okay. But in the world of business, that's not a long time. That's not a long time, right? So again, BDCs are companies that lend out money to other companies in order for funding for various purposes. Now, you might ask yourself, why in the world would they switch all of a sudden from paying that quarterly dividend to monthly dividends? Well, it's obviously to attract new investors, right? It's to attract new investors. It's not really rocket science that we're doing here. And CSWC is a company that is very, very affordable right now. Very, very affordable price point. And before we get into the price point and what the stock has done over the past couple of years, let me just tell you a little bit about what CSWC is. They're publicly traded, of course, focused on providing flexible capital solutions to lower middle market companies. Again, I just explained to you what lower middle market companies is. It's not going to be a company that's just a startup, but it's also not going to be a company that has a wide moat that's been around for 20 to 30 plus years, right? It's somewhere in the middle. And they primarily invest in businesses with 5 million to 50 million in investments across the capital structure, including first lien, second lien, and non-control equity co-investments. Let me tell you something else about BDCs. BDCs are required by law. They are required by law to pay out 90% of all revenue. And let me tell you why that is. BDCs are much like REITs. They're much like REITs in that REITs also have to pay out 90%. And the reason that the government incentivizes them to do so is because these companies, like Capital Southwest, in return, they say, hey, if you pay out 90% of your earnings as dividends to your shareholders, what we'll do for you is that we won't require you to pay any taxes on your business. That's major. That's major. And what it does for the government is it activates the revolving door of money, because in turn, now that company does not have to pay taxes on their business, they get more investors in to invest in that business. However, the investor is taxed. We are taxed twice, right? You're taxed before you even get the money to invest into the business, meaning before that paycheck hits your account, you've already been taxed once. And then you're going to be taxed again at the end of the year when it's time to do your tax return. You're going to be taxed again. So this is just a win-win for the government, right? They're saying, hey, if you pay out 90% of your investments, 90% of your income, what's going to happen is you're going to activate a whole bunch of basically a large influx of money from new investors that want to take part in that 90% payouts and dividends. So it's a way to entice new investors. It's a way to bring in new investors, and it's a way to keep and retain those investors over time. So for the government, it's a win-win situation. Again, it's a revolving door for them. It's a revolving door of money. We bringing in new investors, and we're going to get those new investors' money at the end of the year. When it's time to do taxes, you will be hit. You will be hit with those dividend rates, right? So therein lies the reason why the government would incentivize a company like Capital Southwest to pay out 90%. And it's the same thing with REITs, right? Across the board. Now, let's get into the stock. I don't want this video to be, I keep saying I don't want this video to be 15 minutes long, but it somehow still ends up being 15 minutes long, but not today. Over on stockanalysis.com, we got it pulled up. And if you click on the history tab here, you'll see that Capital Southwest has been around since 1990, y'all. Since 1990, this company has been around. And you can see the chart right here. It's clear as day. You see that steep incline. Beautiful, right? Been around since 1990. That means that they have well over 20 to 25 years of experience and skin in the game. What's that? No, that's 30. That's 35. So we're talking about 30 to 35 years of experience in the game. This company is well seasoned. They've been around for quite some time. Now, if we go to the overview and click on the max chart, you'll see that they're up over 1,000% over the course of 30 years. You might say that's not crazy, right? That's not a crazy number. But if you take into account those dividend gains plus the price appreciation of the stock, it's a win-win. You've been in a win-win situation if you've been invested in this company over the past even 10 years, I would say, because look at the 5-year chart. They're up 82%. 1 year, they're down 13. Year to date, up 6.5% almost, right? But that's not the important part. The important part is, look at this stock price. For $23, y'all, I know y'all can come up with $23. I know for a fact that y'all can come up with $23 to invest in a stock. You go to McDonald's, you get a 20-piece, get a drink, you get a meal. Just for yourself, you're probably going to end up paying anywhere from around 12 to 13 to 14 bucks. Don't have somebody with you, because now we talking 25 and up. But $23, y'all, for a stock that is well seasoned, they're proven, they got skin in the game, they've been around for 30 plus years, and this is a dividend paying company that has now switched over to monthly paying dividends. Let's look at the forecast. Forecast is just barely straddling the line between buy and hold, right? But the consensus right now is buy, okay? 4 analysts that cover say that they have a rating of buy with an average price target of $23.25, which is very close to what it is right now. And then the lowest target they say is $20.50, right? Remember, these analysts are just people like you and I. They're people that they go to, and they have to look over these stocks. They look over the forecast of the stock, and they say, all right, well, we think this is a buy, and we think that this is a pretty decent price to purchase at. That's all this is. They're just people like you and I, which means they can also make mistakes like you and I. So it is not, when you see that buy rating, it is not it's what they recommend, right? Nothing is written in stone. So you see the price forecast there. Let's go over to the dividends and see what they're paying out. They have a dividend yield payout percentage of 10.98%. Now, I don't know how accurate that is, because I found that on stock analysis, sometimes their dividend yield payout that they have reported here is a little bit off from what the actual payout is. But for the sake of this video, we're just going to take it as for what it is. This is almost an 11% dividend yield payout, y'all. Okay, so you're looking at about, give or take, 19 cents per share, right? A little over 19 cents per share. And you see the difference here between July and June. That's because they have just started paying out monthly. They just started paying out monthly. You can see here, if you go back before June, it was quarterly. You see March, December, September, June, March, so on and so forth. So they just, again, switched over to paying out monthly dividends to their shareholders. You're going to compound a lot faster if you're getting dividends paid out every single month versus every quarter. Yet another dividend payout that pays out monthly. Again, this is a BDC, so you'll have to take into account all of the things that comes with BDCs as far as market fluctuations and things that affect BDCs, right? So you have to keep your eyes on that. And of course, you want to keep your portfolio weighted in different sectors so that you're not too heavy in one versus the other. Always remember, of course, to invest in your broad ETF, something like VOO, VTI, and make those the backbone of your investments. Drop a comment, let me know what you think, and I will see you all in the next one. Appreciate y'all for watching. Later, y'all.